Good day. It's Friday, October the 29th. I'm Martin Gagel with Market Radius Research. Today we've got CEO Arnoud Busmann and Chair and Co-founder Vince Sorace of Minehub. Minehub is a tech company focused on improving efficiency in the mining and metal supply chain, digitizing key interactions between participants and bringing automation, cost saving, security, ESG, and regulatory compliance to clients, partners, and other stakeholders. I've got Minehub on the call for a few reasons. Minehub has recently listed, so not many people know about the name, so I'm hoping we get a bit of an information advantage to the rest of the market. The mining and metals industry is notorious for being inefficient and slow to adopt new technology solutions, so I see that there are many opportunities in the industry that Minehub is targeting. And Minehub has already attracted several key industry leaders from the mining and metals ecosystem, helping validate that their platform is something the industry is looking for. And remember, this is neither a recommendation nor investment advice. We're here to learn about the company, so do your due diligence. Arnoud, Vince, thanks for joining us today, and let's hear your story.
Cool, thanks. Vince, you want to go first?
Sure. Thanks for having us, Martin. We're excited to be here. I guess a little bit about me. I've been, in the capital markets for probably about 30 years now, and my focus has typically been on technology and mining-related stocks, and that's kind of how Minehub was born. It was an idea that came up 3 years ago, given I'm embedded in the mining side of things, and just saw an opportunity there. So my day job is I'm the CEO of a copper stage development company, and brought this to light. And then essentially, as we moved it forward, needed to bring in the people like Arnoud that could actually take this to fruition and advance it to where we're at today and where we are going forward. So I'll pass it over to Arnoud.
Sure, thanks, Vince. So I'm Arnoud, indeed, pronounced Arnoud. I'm CEO at MHUB Technologies, based in the Netherlands. My background is quite diverse. I've got a master's in computer science, and then spent most of my career doing consulting, enterprise transformation, new business setups, and innovation, mainly in financial institutions, but also to some extent in corporates and startups. I'm currently based here in the Netherlands, as mentioned, but I've lived and worked across Asia, Australia, New Zealand, North America. Before Minehub, I spent close to 10 years with ING, which is the world's largest commodity bank. And their basically market access and reach has given me a very comprehensive exposure to how these supply chains work and how they're operated, but also the many pain points that are in there. And most of those pain points are actually caused by the stacks of paper that are being processed in these transactions. The last 3 years there at ING, I had the opportunity to figure out how we can address that, and particularly with the emergence of blockchain technology, started working with other banks, but also large corporates, multinationals, to figure out how that would play out. And we set up a couple of the leading platforms in that space, including Minehub.
And when you say ING, that's the big, I believe, Dutch bank that is heavily involved in global mining finance and so forth, right?
Mining finance, they're the biggest commodity bank, so they bank every commodity, acceptable commodity trader, producer under the sun. They finance a lot of mining projects, indeed. It's a massive institution from a small country.
All right, thanks.
Yeah, sure. To make it a bit more lively and to explain things much better than I probably can, we've got a movie that I'd like to share.
Metals and mining powers the world economy. In fact, $1.8 trillion worth of metals and minerals move across the planet every year, feeding industry with much needed raw materials to manufacture the products we use every day. The metals and mining supply chain is long. It involves hundreds of companies, thousands of people, and millions of interactions. The whole journey of moving raw materials from the mine, over land, in trucks and trains, through the ports, and across the oceans to the smelter and beyond is weighed down by manual processes, back and forth interactions, and red tape, which are time-consuming and costly. For example, moving one container from Africa to the Netherlands involves more than 30 organizations, 200 interactions, 100 people, and a timeline of 34 days. 30% of this time and effort is wasted on simply processing documents. On a global scale, over $150 billion is lost on multi-party and paper-based processes every year. But all of that is changing, right here, right now, with Minehub, a digital platform for the metals and mining industry with a rapid deployment model for speed and scalability. By implementing an operating system for the 21st century, we take all the complexity and streamline it into simple, immediate digital interactions powered by blockchain technology, which means you act on real-time data today instead of being busy reconciling yesterday's documents. The Minehub platform allows for far greater collaboration between all parties: miners, traders, processors, financiers, carriers, inspectors, and ports, in real time and digitally. We help the metals and mining industry across the whole supply chain go paperless, and by doing so, help companies operate faster, cut costs, and delight customers with seamless service. Minehub will transform the metals and mining industry using blockchain technology. With security and privacy, it will allow companies to optimize working capital, improve access to finance, and gain transparency across their global supply chain. So goodbye fraud, hello trust. In today's world, where ESG is at the forefront of society, we can help companies to achieve compliance with solutions, such as by tracking their carbon emissions, or verifying mineral provenance across their supply chain. Minehub has established itself by partnering with some of the biggest players in the industry. Companies who are committed to our mission of creating a digitized supply chain. Minehub will have a pivotal role in that digital transformation towards an integrated supply chain in control of its own future. It's estimated that digital transformation will generate $320 billion of value in the metal and mining industry over the next decade, including $77 billion through an integrated ecosystem, exchanging data throughout the world. And although the Minehub platform has a focus on metals and mining currently, it is a technology that has the potential to expand into other areas too. Our platform addresses some of the key challenges that can be found in other commodity supply chains and industries. Minehub is a global operation. We have offices around the world, managed by a world-class team. The future is Minehub. The future is bright. Minehub. The transformation starts right here, right now. Visit our website now, www.minehub.com.
At the base level, the solution that we provide as a platform it drives a lot of efficiency, security, transparency into the operations of supply chains. But the data that it generates and the information that it generates actually supports a number of mega trends that we probably read about in the news every day. So digitalization of trade is accelerating massively, especially since the pandemic started. Decarbonization, I don't think I need to explain how important that is at the moment. We see big shifts in how working capital is provided to these supply chains, with banks have been sort of exiting the sector, some of them running for the hills, other types of institutional and non-bank capital moving into the sector. But without the tools to do that, we see resilience at the forefront now. If you read the paper, it's all about broken supply chains. We see disruptions everywhere. We see high commodity prices, high product prices, unavailability, stuff, empty shelves. It's a huge problem. And a lot of that is related to a lack of digitalization. And then, of course, we've got this new super cycle of mining that is starting. And one of the questions is, so how can we support that growth without the 10x growth that some parties are expecting in the sector, without creating 10x bigger issues on the ground and back offices. Right? So it's all these themes are central to what we're doing. So I'm going to skip that one. This deck, by the way, is also on the same page. You can download it on the website for more detailed review. Briefly on the team, so Vincent and myself are here. What I'd like to talk about is some of the people on the board of advisors and directors. So we've got David Gruffalo, former CEO of Goldcorp, supporting us. And on the advisors, for instance, we've got Heike Truel, formerly from Anglo American. She's fantastic in getting really, really hands-on with the organization as we speak.
Is the company, you in the video, it had a bunch of locations. Is it truly like a virtual organization? Is there the key or the main group in Holland where you are with your programmers and your biz guys?
No, it's spread out, and that's by design. And so it started out in Vancouver with Vince, and for instance, our CFO are based in Vancouver, our board is based in Vancouver. Then we've got our product team is based in London and it's growing. We've got technology. I'm based in the Netherlands. Our chief operating officer is here, and our general counsel. Then we've got a technology team based in northeast of Holland, primarily consisting of IBM developers. But then we've got more customer-facing teams in Singapore. 2 in Singapore. We've got 3 people in mainland China, and we've got 1 in Japan. And the rationale for that is that the model that we have in the rollout strategy is that we are really set up to support our users onboard their customers and their suppliers, and their customers and suppliers tend to be in those markets, and it doesn't make sense to work with a giant state-owned enterprise in mainland China from our garage in the Netherlands, for instance. So we really need to have that on the ground capability. Plus, there's a lot of innovation happening. There are unique local challenges that we can develop solutions for, capitalize on. So there's it's much more than just a sales strategy. It's also an origination strategy for innovation.
All right.
I'll skip this one. It's just to highlight here again, just the fact that this is one of the pain points we're solving. The fact that paper is being used creates such a drag on these supply chains, both on efficiency but also working capital. We lose a lot of money every year to just handling paper. And this in the day and age where technology and digitalization is almost everywhere, except in these supply chains. So Minehub started out from the beginning as a co-creation. It was a private company, not owned by corporates, but it's co-created with some of the biggest and some of the smaller parties in the industry. Initially, started out with a consortium consisting of Goldcorp, Wheat and Precious, Capstone, Ocean Partners, a concentrates trader, and ING Bank. So I got ING Bank involved when I was still there. For our first release, they really provided the input and validation of that initial solution. Then we took that, we built it together with IBM, and we took it to a beta stage at the end of 2019. Then more parties got hands-on involved. So we started working closely with BHP, with who I don't need to introduce, work with China Baowu, the largest steel producer in the world. So I work with Vale. We've got other companies that we're working with on a big Japanese group, for instance. So it's at every single step of the way, we've been designing and building and validating what we built with these parties, not just from a software perspective, but also from a value proposition. What does it mean? What's the impact? How valuable is it what we're doing, and where can you save time? What else is valuable? So it's really building the future for industry with industry.
And I guess you really had to, with those partners, figure out their business processes. You're trying to disrupt them, but you're also trying to fit within them so they understand how to use it. So you need that domain expertise to sort of, this is how this paperwork flows, and this is how we're going to sort of simplify it.
Definitely. When we started this process, that's exactly how we interacted with them. The original participants acted as a focus group, and we all sat around the table. They knew there was opportunity here for them within their operations. We kept the group small, and as Arnoud mentioned, it was kind of corner points or pillars of the industry with respect to commodity finance with ING and Wheat and Precious on the streaming, and a miner and a trading house. And, with IBM at the table, it was an information dump. So yes, they acted as a focus group. And it was, hey, what would you guys like to see us build to make your business better for you? And that's how this kicked off, and then continued to morph with additional parties, as Arnoud mentioned, the table, like the BHPs and like the valets. So it truly was something that we built with industry for industry.
Well, maybe to add to that as well, to your question, in terms you need to understand the business processes. Yes and no, because Minehub actually steps in between organizations. So you got the enterprise, the SAPs of this world that automate within a company, and you really need to get your hands dirty on the internal business processes. We really step in between the companies. So it's a slightly different space. The other thing is, on the one hand, you need the industry access, you need the network, you need to be able to engage with these companies where you speak the same language, you understand what they're working on, etc. On the other hand, you don't want to be too much of an insider of one company, because then you think you know how everything works, and that's the way you're going to build it, right? It needs to be generic for industry, not just one side of the market.
So it's not so much for internal processes. It's like big mining company here. They've got an SAP that you get the data from them, and then you send it and connect it to the trading house or and then so you sort of simplify and make a common electronic forms and data transmissions and that.
That's it. I'll just explain shortly. I'll get to that shortly how that works. But yes, it's a common data platform. I mean, it's a tragedy in this day and age that we have got, let's say, one large mining company has $1 billion SAP system, and then their customer also has $1 billion SAP system. And when they want to communicate with each other, they start printing stuff and signing it and scanning it and attaching it to emails or WhatsApping it or stuff like that, right? I mean, it's so what we are doing is we are changing that game. We're stepping in between. We're creating not an enterprise resource planning solution, but an ecosystem resource planning solution, connecting enterprises. Some of them...
You're not a threat to SAP. You don't have to kick them out or anything. You add value to the existing systems.
We put SAP on steroids, absolutely. Yeah, okay. Because we can help them get real-time. We can connect the real-time world into the SAP processing, absolutely. It's and the beauty of that is that we're not competing with existing investments, existing systems. We are complementary, putting it on steroids. So that's one aspect. We're also not altering internal business processes where you suddenly get a big change management dependency on your implementation.
Okay.
So as mentioned, what you saw in the move, we connect all the parties to collaborate, right? So you saw the miners and the traders, the inspectors, insurers, the carriers. Everybody has got something to do in these transactions, and we make sure that we provide this shared environment where they can get together and do that. They get together for that specific transaction. Everybody does their work, either adding data, checking data, and then they move on again. But if we go a little bit into a solution, it's communication between all these parties. It can be 20, it can be 30. It's just always, it tends to be bilateral, same information, multiple channels, multiple formats. And what we're doing is, and so you find that everybody is spending all the time reconciling information, trying to figure out what's happening, chasing each other, what's the status, where's the shipment, what's in it, oh, is it going there? I told you should be going there, etc. So you've got this massive errors and reconciliation challenge, and we take all that pain away by allowing companies to work just on shared information.
Gotcha. And because just to emphasize how many, like when you're shipping something, you've got the customs and clearing, you've got the insurance company, you've got the bank that pay at a certain point, you've got the customer who wants to make sure that it's been sampled as the right quality. So, and they're not going to insure it unless they, like, you've just got this whole web of interconnected people who want to know and authorize. Do I have that kind of right? Is that the kind of that type of complexity?
Yeah, that's the end game, or the direction of travel. Sometimes the people are actually other platforms. Like, for instance, one of our partners is Contour. They aggregate banks to provide letters of credit. I don't have to do that anymore, right? We can connect to the platform and access those services through them. But I guess the point is that the system and the solution works we don't have to wait until everybody is on board. It works even for just one company. And then it gets more valuable as they connect to another company. It gets even more valuable if there's a third party coming in it. So the more customers you have on it, the more suppliers you have on it, the exponential value creation you get, pretty much like a phone.
Okay, so if I'm, let's say, just the only guy running this, it would automate, like some of my partners need faxes, some of the stuff needs to be done by email, and it would sort of, okay, we send a fax to this guy, we scan this document in from that other guy we just received, and it just sort of integrates all those juggling of the communications?
That's it. We channel all the communications through one platform, even chat. Absolutely. Yeah.
All right. I wish my phone had that.
If you look at the data or the information that is being processed in the transaction, it's actually very important, fundamental information from supply chains. If we're talking about, I just list their contracts, inventories, logistics, the specification of materials, documents, financing arrangement, payment status, all that kind of stuff. It's hugely valuable information that is currently not available. But by centralizing it, we can start creating it, making it available in real time. And when you start making it available in real time, you suddenly can do a lot more things with it. You can start looking at optimizing stockpiles at smelters and steel mills, because you know you've got real-time data on what shipments are heading your way. There's things that we work on, I'll explain it in a sec, is on the ESG side, how to automate Scope 3 emissions accounting. We know on trade finance, it's a huge problem for financiers to finance commodity these transactions, because they rely on a party to provide them with the information to manage the risk that may not have an aligned interest, like the borrower, for instance. So they spend a lot of time checking whether a document is real, whether a particular inspector has indeed uploaded a particular certificate, whether an invoice has been approved by the customer. And that all takes time and effort, and still the risk is there. I mean, we've seen many examples of a particular borrower using the same collateral to go to multiple financiers and basically getting financed multiple times, right? And most of them are left holding the baby at the end. So what we do is with trade finance, for instance, we can give people, lenders, a front row seat. They don't have to do anything. We just add them to the transaction and they can see exactly what's happening. Takes away any incentive for a borrower to game the system or trying to double finance things, because the lender sees everything in the transaction. And the lender is first there when something goes wrong. They know exactly where it is. They can jump in, take the collateral, and that's it. So that takes out so much risk for everybody. So these applications are listed yet actually on the roadmap for this year, and this year is not that long, so you can imagine that they will be coming out very soon. For instance, trade finance is something that we are actively testing now in production, so that's going to be there imminently. Concentrates is something, assay exchange is a problem that we're solving, that's also out there being tested. Carbon tracking, the ESG application, is also going to be something in the next couple of weeks. So we are very close to announcing a lot of very exciting releases. To say though, what's important to understand, and you touched upon it earlier with the ecosystem and with SAP and other platforms. Our mission is not to build everything. We're not going to boil the ocean. We're not going to spend all our money building software. It's a lot of it is about partnerships and integrating other solutions, third-party solutions, other networks, to rapidly create value for our users rather than being dependent on our own on our resources. And there's a business model associated with that. I promise I got a little bit into the ESG side. So compliance is a big part of everyday's life and getting bigger every day, right? So I don't think you have to, there's anybody that doesn't complain or is faced with that reality. It's increasingly so for producers, mining metal supply chains, to disclose ESG performance. And if you, for instance, take a car that a consumer wishes to buy, the automotive company now will have to have a sustainable brand promise, be able to prove ESG compliance in their supply chain all the way back to the mines where the materials come from. And some jurisdictions like Europe, this is already law, particularly as it relates to the battery. Another challenge is tracking, reporting on scope 3 emissions. It's huge. I mean, if you take a company like a big mining company, there'll be thousands of customers, there'll be tens of thousands of suppliers, and each of them has a different emissions footprint, and each product has a different emissions footprint. So if you need to account for your scope 3 emissions, which is that buyer, seller, supplier scope, you need to calculate so much information, and then not just one-off, you need to do it continuously, and all these suppliers and customers are continuously changing their emissions footprint as well. So it's a nightmare from an accounting perspective. It's impossible to do, but we have to do it. The cost of capital is directly correlated to it, even license to operate. So these two challenges, that traceability of minerals and the automating carbon accounting, automating ESG compliance verification, this is what we can do. I wouldn't say out of the box, but this is fundamental to what we do in our platform, because we have that information on our platform.
Arnoud, can we just quickly go over scope? Maybe not everyone knows scope 1, 2, and 3, what that means. Scope 1 is I do something and I create explicitly some carbon myself, and I got to account for that.
Correct.
Scope 2, as you say, is indirect, and here on my own knowledge, I know roughly, but I don't know well enough to explain it. And then basically scope 3 is you're trying to take into account all of your suppliers' carbon footprints and incorporate that into your own.
Yeah, just exactly. So scope 1 and 2, most companies have sort of got it in hand, or they're working on it to get a handle on that, reduce the emissions of their operations and their processing, etc. So that gives you the scope. This gives you an intensity that a product have. Let's say a ton of iron ore has a ton of CO2 emissions associated with it as it is being produced. But then it starts moving. So a mining company currently reports on scope 1. Scope 2, that's part of the standard disclosure that they need to do. But then scope 3 is where the voluntary market steps in and basically saying, well, you're not just accountable for what you do, you're also accountable for what your customers do with the product you sell them and how you ship it to them, and the same thing on the supply side. So you see mining companies actively investing in their customers, in their suppliers, to reduce the carbon intensity or the emissions intensity of production processes. Because not out of a charity aspect, but out of a direct self-interest, because helping your customers, investing $100 million, for instance, in your customers' emissions efficiency and getting it down has a direct correlation to your scope 3 exposure. And so if you think about what we have on Minehub, we carry the fabric of supply chains. We know who is selling what to whom. We know what the material is. We know which asset it comes from. We know which asset is going to consume it. We know the logistics, which vessel it's on. We know and we can calculate the emissions of that entire transaction, which gives both the seller and the buyer a real-time scope 3 calculation at the transaction level. Even greater is when we add a button to it, offset. So you can immediately go off to a carbon market and offset that entire transaction at source. So you deliver carbon neutral commodities to your customer.
And this is going to be, in Europe, it's fully required, and it's just going to be needed around the world. So the big corporations need these scope 3 types systems and solutions to keep track of things.
Yeah, I mean, and it's not just the corporations. If you think about the financiers are the big push behind this, institutional investors. Because if you're an investor, if you're a big investment fund, and you're investing in companies that have a big scope 3 emissions exposure, you have that exposure as well as an investor. Right? So you've got a direct incentive to reduce your exposure to the emissions of your portfolio.
Yeah. And then that company's own cost of capital, if they have bad scope 3 exposure, their cost of capital increases. If it's good, their cost of capital decreases. So there's a very real economic impact on their valuation of business.
Absolutely. It's a great design. And where you see now, not just at the company level, but you see that jurisdictions are starting to create carbon borders. Europe is already putting additional tariffs on the import of products coming from high carbon intensity production processes. As a country, you don't want to import somebody else's emissions because it's going to count against your performance in that regard.
Yeah.
And this is something that we are building now. This will be released very imminently. It's very, very relevant, particularly if you think about what's going on in Glasgow in the next 2 weeks on the COP26, where hopefully we get some agreements on and some commitments on dealing with this information that we are going to be producing.
Okay.
So our business model is multifaceted, just like the platform. So we'll discuss this. We've got this core platform that really drives huge efficiencies in operations, security, transparency, and that core platform runs on a big blockchain network. We provide it as a SaaS service. Companies can subscribe to that. It's basically subscription fees. Now, that's the basis. Once the information is there, we can help customers generate a lot more value than operational efficiency out of the information that we capture on the platform. And this information, again, is the information around the interactions between themselves and their customers and suppliers. Now the business model there is much more will be much more value based in terms of the charging mechanism. So if you think about trade finance, we will be looking to charge 1 to 2 basis points, for instance, on the value of the assets that are being financed. If you think about emissions accounting, we still need to price that, but if you think about the value drivers as it relates to cost of capital, it makes much more sense to correlate the pricing mechanism to the cost of capital benefits rather than the operational efficiencies in being able to calculate the information. So there's going to be quite bespoke pricing mechanism for our enterprise applications. As mentioned, we are an ecosystem play. It's an open platform. Our mission is not to dominate the world with our own applications. It's very much integrating services and solutions that exist out there that our customers already want to know and want to use, but make sure that we start building that data bridge. And that connection is going to drive a lot of value. And this is basically almost like an app store mechanism where we can monetize the connections that we have with our partners, so revenue sharing arrangements, etc., which will be bilateral, not just to us, but also from us. And finally, there's an angle where we believe is a lot of value. So this data markets. There's big agencies out there that provide pricing data, market intelligence, etc. And companies pay 7-8 figures sometimes to get access to that information to indicate the value of it. Now, Minehub will be generating a lot of data as well, or the users. Because of its blockchain nature, it's not our data. We cannot just take that data and start monetizing it. But what we can do is we can go into business with our customers, aggregate information to an anonymized level, and then take that information to market together with our customers, where we again can generate an origination fee for ourselves.
So your model, your revenue model is you're going to have some sort of general licensing fees, and then you're going to clip a few basis points on the value of transactions.
For specific things like potentially financing. Trade finance, because it's correlated to the value that we create there is directly correlated to the risk reduction that we do rather than the operational efficiency.
Yeah.
Okay. Correct. And it's going to be bespoke depending on the service, and it's very much a cloud-based, it's like a SaaS-based offering. So you've got your base level, everybody gets that, and then you've got these optionalities, third-party apps that you can click on and switch on, other potential solutions that we build, you can get access to and pay for it as you use them.
All right.
Now we call Minehub. We spoke a lot about mining and metals and the pain points there and what's happening, but it's a go-to-market focus, right? So the core platform and some of our enterprise applications, they solve problems that are not unique to mining and metals. They're not even unique to commodity supply chains. They apply to lots of other supply chains. Think about visibility, think about emissions accounting, think about trade finance, etc. It's very general. So, and we started to dip our toes into some of these other markets. If you think about it, if a mining company uses Minehub for their downstream shipments, the marketing and sales of for instance, the iron ore, the copper concentrate that they produce, these mining operations, they procure a lot of equipment, trucks, spare parts, tires, fuel, etc. A lot of those materials are imported. They face exactly the same challenges as their customers do, as their own customers do, right? So we're starting to look at how can we support mining companies with their procurement process, which creates more product side, which is a different commodity or a different product, but it's the same problem. And the way we've designed Minehub, it scales actually without any major rework. It's just a different product that we're moving. And so similarly, we're starting to look at some of the other commodity sectors. There's a bit of coffee that we're starting to look at, the same on the energy side. So we've got a huge opportunity for scaling in terms of the markets that we serve. And we've got a huge opportunity in terms of the problems and the value that we can create in these markets. If you think about it, in theory, about 2/3 of global GDP is our playing field.
Yeah. Okay.
Addressing one of your questions early on, right? So we're located in, we're spread out. We're a small team, but we're spread out across the world rather than concentrated in one place. And that's exactly related to our sales strategy. Need to be able to, the biggest markets by far are like China and Japan. And basically we need to be there on the ground. We need to be Chinese. We need to be Japanese. We need to speak the language. We need to understand local culture and practices.
Your team is mostly these sort of biz dev or business sales type people, or like, because you partnered with IBM as well, are they doing some of your development? You're sort of outsourcing that to them, and you're more focusing on like the business relationships and that side of it?
Yeah, so we focus more on product, on strategy, marketing, business development, the core company competences, with IBM as our technology partner, which has helped us scale up and down resources as we went through the startup journey, right? We build a prototype, need scale down capacity. As we take it to market, start validating, and then when we know what we need to build, we ramp up our capacity again and down again. So IBM is our technology team. They're very much integrated in our day-to-day operations together with our product team. So it's more of a question, not so much a question of brand, it's more a question of who pays whom, rather than anything else. Right? But as we progress, we don't intend to build a massive enterprise sales force. We're not going to be knocking on doors of companies to sell an enterprise solution, because what we do is fundamentally different. Our job is to make sure that our customers and our users are very successful in onboarding their customers and their suppliers, because that's where they create the value, right? So it's an indirect method.
So, and you're going to, I would think, get some network effect in this. The more people are on your system, the more it'll have a gravity of pulling other suppliers and so forth into it, because some big, like a Valet or a BHP can say, hey, you've got to sign on to our system if you want to be sort of a tier one supplier of sorts.
Yeah, absolutely. And that's the theory, but that's also playing out in practice. There's network effects are fundamental to the trading network. Basically, it's an implicit part of it. Most customers have many suppliers, most suppliers have many customers, and the value increases exponentially the more of your portfolio of customers and suppliers are on there. Absolutely.
Right.
I guess what we're doing is, a lot of what we're doing is actually quite recognizable out there, right? So at the core level, it's like Dropbox, it's like WhatsApp, it's like SAP. So there's many things that we are doing that are already out there that have really well-known multiples and valuations associated with it, but we combine them in quite a unique way. And then we've got this fundamentally different underlying technology, which is blockchain, which is the critical enabler for what we do and the ability to create trust with our users that we're not the ones that are looking after data, they have custody of the data. If you look at then, okay, so in the marketing comparables, what's out there? We've got not many companies, if you label it blockchain infrastructure. And most of these companies are actually private. Many owned by corporates or consortia. Most are pre-revenue. Most of them are trade finance focused. And they're all, what they have in common though, is that they're all valued at multiples of Minehub. But there's also none that have the breadth and depth of what we're working on. So we provide solutions across the spectrum, end-to-end supply chain orchestration, trade finance, ESG reporting, as well as other applications, not just our own, but also those of our partners. So at this stage, when we listed the company about a month and a half ago, the valuation is around $50 million US. If we look what's out there, we believe that's a very attractive valuation and with a lot of potential for upside. Briefly walking through our history. So Minehub was founded in 2018, as Vince mentioned earlier. 2019 was really about building our first platform together with our partners. 2020, last year was all about testing it, validating it, refining it, identifying new value propositions, prioritizing them. Some of these pilots were in the press, many weren't, but they gave us enough information to be able to release a commercial version of the platform at the end of last year. And then this first half year has been focused on getting our first two large customers signed up. We have got premium services that we are building and are rolling out. And this second half year is really around capturing some of that revenue, it'll be minor, but also acquiring customers. So for us, revenue is of course a good metric to use, but given the network effects in the business model and the potential that we have, for us, it's so much more important that we generate adoption over the next period, right? And revenue is something that we'll be looking at next year. So if I summarize what I've just been talking about, so I think we've got a product that has been validated over the years. It's a fantastic product. We get really good feedback. When companies see it, they say, oh, is that it? It's deceptively simple, but extremely powerful. We've got world-class team globally, some very high-profile customers. I think some of these customers, many startups die trying to acquire one of them, and we've got a few of those parties that we work with. Our cap table is very diversified. We've got loyal investors that have been there from the beginning, very strong buy-in from our management team who are going to be there for the long run, and we've got a very solid balance sheet.
Is it hard to implement the system? Can they just say, okay, over a few days, instead of doing XYZ process, we're going to do this? You don't have to rip things out like an ERP system and then install it and have all this pain attached to it. It's like on Monday, they just log on to this new website and start doing some of the work through that instead of filling out some paper forms?
Absolutely. I mean, we can get someone up and running within half an hour, right? Okay. So we're not the dependency. We understand also, given the background of the team and our engagement, we understand that large corporates can't just sign it. So if you say use a new system, can we use it? We say, oh, better check with IT, check with procurement, check with legal, and before you know it, you can spend many months producing a lot of paper, filling in questionnaires, etc. So we've invested not just in a very rapid onboarding for everybody at the baseline, but we've also invested in a very robust cybersecurity framework, a risk management framework. We've got very robust company policies and operating policies. So we can, basically for the most demanding customers in the world, from a procurement perspective, we can provide them with a set of information that covers every single aspect what they normally want to know, right? So we can move as fast as they can move, let's put it that way.
And you've put all the effort in to get all that background information and data that they need, that they ask for something, you can pretty much supply it to them.
Well, there's a beauty of partnering and working with some of the most demanding companies in the world. The expectation level is very high. We've been able to collaborate, partner with them, and jointly figure out how we can best address their needs. So it's not in our interest to make it hard for our customers to do business with us. So they gave us the opportunity as well to work with us so we can make it easy for them.
Yeah, you've done a few transactions for, if people go to the website, you can see news releases from earlier this year before you guys went public, and you announced some transactions, which I think with BHP and with Valet. Are those ongoing? Where are we in terms of generating revenue and transactions that are happening on the platform now?
There's quite a bit happening, and to be honest, we have been our news flow has been a little bit constrained recently, but that's going to pick up now. From now on, we've done major developments. We've got some big events happening with customers, so you'll see that news page rapidly expanding with more stuff as we in the next period. Absolutely.
Okay.
Live transactions deployed in many locations. It's absolutely happening, but it's. I mean, this is a big play, right? It's a new way of working for an industry that is notorious for its conservativeness. But now, what I've seen happening in the last year is spectacular change in attitude in terms of we must go digital. It's becoming really almost part of the license to operate for these companies. So there's a huge acceleration of it, and that's what we're positioning now for.
So how are we as investors going to know you're succeeding and that you're gaining traction? Do we wait for your quarterly financials to come through and then say, okay, they did $1 million or whatever of revenue this quarter? Or is it you're going to announce, hey, we were part of $1 billion worth of transactions, or we signed up this customer? How do we know you're succeeding?
Well, sorry, Vince,
as far as, it's, as Arnoud mentioned earlier, right now it's about adoption. It's about two things. It's about us continuing to create additional, call it functionality, through what we're calling these network applications on the platform. And as he mentioned earlier, things like trade finance and ESG and the stuff that's immediately in the pipeline that we've been working on and building. Some of those will come with partnerships. Some will be on our own. And then it's about adoption. So, you're going to see us expanding the platform in the coming period, and then continuously expanding. So when we talk about a network application, we've kind of run at what we saw as being the low-hanging fruit. But every time we walk into a customer's office, or some parts of industry, the question comes up, hey, can you do this? Well, sure, we can build that. Everyone's kind of got some unique sets of kind of asks and demands, and but that would also benefit industry as a whole. And it doesn't cost us much anymore to build these things, and we can do them very, very quickly. We've got the core platform in place. We've got the core foundation in place. So you're going to see us doing that. You're going to see us over the coming quarter or two expand the offers on the platform, which are very valuable. It's this isn't an app that you pay $2.99 for on your iPhone. These are applications that are going to come with significant tickets to them for users through various models of potential revenue generation. So that's the stage we're setting right now through the launch of additional applications. You're going to see us doing a whole bunch of additional transactions with big names in the industry, and then that is what you will kind of follow into what we believe will translate into revenue in the coming year. So I think each one of these events coming can be perceived as a significant value add piece to the company.
Are you afraid you bring your solution to a customer and they say, well, we like it, except if you add A, B, and C to it, and then they go, well, now you need to add D, E, and F, where it just sort of creep scope, where they keep asking for more and they never kind of start using it? Or can you get to the MVP level where, okay, it's good enough now, let's transact on it. If you like it, we can add these features to make it more usable?
there's always going to be a roadmap, and there's an MVP as the beginning of the roadmap. Where we don't want to go is customizing for each customer. And to be honest, you don't have to, right? There's already like a commonality in terms of how these supply chain works, how these supply chains work, because companies already interact with each other. So you've got a particular structure for a certificate of analysis, for instance. There's only so many ways that it exists, and the information is pretty much similar. So there's an opportunity right now for everybody to standardize as well, which is one of the things that we offer, and to have a slight hurdle to customization. So I'm not worried about that. I haven't seen that, and we are working with multiple customers, multiple types of the market. Not one customer is really dominating, saying, "Well, I want you to build this, otherwise I'm not going to use it." It's more around providing inputs to create a solution that works pretty much for everybody.
All right, we've got a question here. Can you further explain your revenue model, and could you give us some? He says, some hypothetical revenue figures. Like, if there's a $1 billion transaction, would you get like a 1 basis point out of that? Sorry, going back to your revenue model, it's sort of a SaaS and a transaction model. Is that basically how it works?
Pretty much. The base layer is for everybody. That's a SaaS model. Very simple pricing, low cost pricing as well, because we don't want to create friction at that level. And then we have
and that would be whatever, a 50 or $100 per user per month, like a Salesforce.com or something like that.
Yeah, I want to be like Microsoft Office or something like that, right? And not maybe slightly more than that, but it needs to be accessible. It's a business tool. You'd use it in daily life. Yeah. Everybody's interest to make that affordable and accessible. And if you think about it, our customers are not just the large corporates of the world. There's a huge small to medium enterprise market that I'm targeting, and that we are very excited about in terms of the solutions we bring there. We want to make it accessible. So that's a baseline level. And then the usage-based pricing is going to be much more value-based. So what value are we creating by a particular service? If we're reducing your risk by 10%, surely you can give us a basis point of that, right? So that's more the pricing thinking. The revenue model is quite simple though. This is an ecosystem play, it's a network play. So we're going to create a lot of value at an ecosystem level. Now we want to make sure that that value is significant. We want to make sure that all participants get value as part of that, being a player in that ecosystem, and then we get value. So we are third in line to capture that. If we don't do number one, there's no point to our existence.
Makes sense. Make the customer happy, give them value, and then hopefully you can grab a piece of that.
And we can, because we've validated that. Huh? We're working closely with customers on pricing models and stuff. So
And to address, I guess, the second part of that question, no, we're not putting out any sorts of projections right now. Listen, we have them, we've done them, we've done extensive modeling internally. And yes, it looks like a SaaS model. It's got a big hockey stick to it. But we're just being cautious right now, and we're not going to be putting anything out, for a bit on that.
When you get, let's say, a little more mature and get a little bigger, are you expecting that the SaaS revenues will kind of be a smaller core, like that's going to be the really consistent part, and then the big upside is going to come off the transaction, the percentage of value, transaction fees that you clip from that? Is that where the big kind of wins are going to be?
Yeah, I'd say that the base level is going to be significant. And we're also providing the services around it, like the cloud, etc., where we have a revenue and a profit opportunity. But most of the value is going to come from the add-ons, the partnerships that we have, the enterprise applications, definitely.
All right. And another question here: did you explain how the bankers and credit agencies benefit from your service and how they could begin to require your service in order to provide financing?
I'm not sure if I explained it, but it's basically one of the companies that we're working with will be looking to require their borrowers to use the Minehub platform in order to get credit. Basically because of the security that it brings. And then if you think about that, a lender might have 20, 30, 40 borrowers, and they're all going to be required to use the Minehub platform to administer their credit. That's a good jump in customer base, right? And it's a good value generation.
And then once they start using it on that, then that network effect, they may start using it. Hey, this is a valuable tool. We can start using it elsewhere in our business.
Exactly. Yeah.
And let's say that there'll be more information coming out about this specifically as we're talking about kind of this trade finance application in the coming few weeks.
We should get wrapping up here, but could you just talk about, you have the slide there of the cap table, but what's your cash position? What's your burn rate? How long is your runway? That kind of a thing. Can you describe a little bit about that?
I think right now, we just finished raising 10 million. It was a good round, a book full of solid institutional investors in that, a good banking syndicate. And so, we've kind of planned a runway. It really depends on how aggressive we want to be. We planned a runway till good latter parts of our end of next year. We could stretch it out. But, we're going to pick our spots here. We think there's some opportunities in front of us where, we can spend more aggressively and get things built and done more aggressively, and especially some of the very opportunistic pieces. And we think there's going to be opportunity to do again, if we need more capital, to do things at let's just say substantially higher valuations. I mean, that's our intention. I've been in the capital markets a long time. I'm very cap table sensitive and savvy, and we'll make sure that dilution is a big concern of mine. So I would pay close attention to that. We'll manage that. We'll manage the growth requirements and the spend requirements around what we need. And if the opportunity comes, then we'll continue to, we'll bring in capital as we need it, but it'll only be for advantageous situations.
All right. Is there any potential M&A? Is that an M&A kind of a likely scenario, or are you pretty much, you build your own stuff?
It's something that we've talked about and we've looked at a few opportunities already, and we'll always continue to look. If there are opportunities out there that are accretive to our business, we're going to look really hard at them. I think, and Arnoud can talk a little bit more about this. We are kind of in a bit of a unique situation. That kind of goes back to that the blockchain infrastructure slide that he put up. Where most of the guys playing in the space right now are in the trade finance side of it, but we're in a unique situation with respect to having that kind of like core platform built where we could take the position where we build most of this stuff out, that other people kind of built out one aspect of it and building their whole business model around it. We can now just kind of layer these things on to our core platform. But we'll look at everything and we'll look at, again, how they can become accretive. If it's something that whether we build, whether we acquire, or whether we partner. It could be a third-party partner solution that we bring something that can layer onto our platform with a third-party application and generate rev shares off of things like that. So those are the way that's the way we'll look at that aspect of it.
It sounds more, if there would be M&A, it'd be more on the technology side. Would it make sense to maybe buy someone, I don't know, that's in the trade finance side that already is plugged into hundreds of companies around the world, and you kind of leverage their distribution and network?
That would be one consideration. I guess if you think about how we're positioned, so we have an opportunity because of our core platform of Vincent is to take value propositions to market very, very quickly at a low capex because we've got so much of the stack already there. We've got customer base that told us that they want it. So that's one element. But on the other hand, we're also very much an open, integrated, facilitative ecosystem where most companies out there that are in this space are synergistic complementers of what we do. So if we find the right complementers and we figure out that together we can generate more value for our shareholders, we won't hesitate too long, right? And we will have an opportunity to meet with lots of companies and identify potential M&A targets that way.
All right. Well, I think we've covered it. Is there, and before we wrap this up, is there anything you want to highlight?
I think, Arnoud's done a great job at kind of describing in a lot of detail that a lot of people don't really get this much access to. So that's fantastic. And what we do, how we do it. As he also alluded to, we've really been kind of firing on all cylinders lately. And it's time now that we tell the markets about what we've been doing and everything that's coming. And as he said, I think the next couple of quarters are going to be news heavy. I think they're going to be exciting. I think they're going to show kind of, the promise to the platform, the potential for the company. So that's what we're looking forward to.
And there's a question on there regarding promoting the company. You will start an active IR program as the business starts firing on all cylinders.
Yep, we've got groups already announced and embedded in this on the investor relations side. So we'll be working with them, a lot closer to really market the story, and that's going to come around again. What's going to be happening over the next couple of months that we're able to get out to markets.
Excellent. All right, guys. Well, with that, thank you very much, Vince. Thank you very much, Arnoud. Appreciate you taking the time to talk with us, and hopefully, maybe we chat again in a few months after a bunch of news releases come out, and we can sort of get a pin on how things are expanding here. So thank you very much.
Thank you, Martin.
Thanks for having us, Martin.
All right.
Have a good day. Okay, bye-bye.
Bye.